So yeah, failed the breakout at 55.35 futures. Not a continuation yet till it gets a lower low. So still need to see this break below 5,500, but kind of in a pretty stable downtrend for most of the second half of the day. That might happen overnight as we move, or tomorrow morning with ISM. Commodities down again, largely promulgated by a big drop in oil. We got precious metals up a little bit, but copper down. So industrials maybe not doing so well. Industrial metal, agricultural commodities are up again. Dollar down a shitload on the day. Obviously, today's JOLTS data not good for that. And yields fell back pretty hard. We actually almost ended the day with the 10-2 uninverted, but they've been back and forth throughout most of the intraday. Correlation held and peak formed on the 1 and the 3 month. Got a lot of short vol into the end of the day there as we bounced back from 55.03. The carry trade's still breaking down pretty rapidly and starting to break down on the shorter end too. Leverage on the 6 month is almost down to like 7x, and on the 3 month it's fallen back below 7.5. The 10 year is probably getting hit the hardest here. You see this is down to 6.68 from this morning's high of 6.8, so down about 0.2. Move, definitely gonna be moving up alongside the 3 month correlation, which hasn't changed much. This is kind of weird, but it may be just indicative of a lot of call selling, but no one seems to be picking up tail risk hedging on this drop, right? We're not getting a lot of out of the money puts. Mostly we're just getting vol doubling, tripling down on their already underwater position. 73.35% of the S&P over its 20-day moving average, and correlation between VIX, cash VIX, up a little bit from yesterday, but not very much. Fed fund futures pricing in 1.06 rate cuts by Feb. So moving the needle more towards recession, right? We do have jobs tomorrow, but it's just like ADP. It's probably not going to be that important. I would say S&P and ISM services PMIs are going to be far more important than the ADP employment change. What will matter tomorrow morning before market open will be like non-farm productivity, labor costs, and yeah, the quarter over quarter reports from BLS. Although those should be revised now. Their non-farm productivity is expected to jump super hard, and labor costs are expected to go to nothing, which might be true, but that would also be indicative of a big shift in unemployment. Claims, I don't think anyone gives a shit about claims. It's just weekly data. That's not gonna outweigh PMIs and quarter over quarter BLS. Those are all going to be way more important. Unless there's a huge miss or something in jobless claims, I don't think it's going to be that big of a deal. AI kicking in for productivity and labor costs. That's the dream, right? I don't think that's true. I kind of want to go over where that puts us on the technical side. So we're just sitting right at the 50 MA here out on the daily. A breakdown from here is very bearish and would indicate a new low for the S&P. We haven't lost it yet, but we did close below the EMA 30, which is still not bullish, right? And lost whatever ground we gained above it today. Right now, the 50 MA is sitting at 505, so we slipped just a little bit under it into the end of the day before bouncing back, but still closed below the EMA 30, which is at 55.20. These aren't that important, but they're important for systematic traders. And so, you're gonna get sellers on the EMA 30. You're gonna get some buyers, but not a lot of buyers, right? At the 50 MA. That was interesting. Next level to the downside is going to be like the long-term trend around 5,300, which is right about where delta neutral is. If we lose that, maybe back to October lows. That would be really bad. I can see us going to like 5 or 46, even as low as like 41. But I mean, like 41 would be like we're recession. Recession's confirmed. Yeah, losing delta neutral is really bad. Usually it's followed by like a 5% or greater drop. Well, 5% from delta neutral right now would be right around 5, where the synth long is. But if that synth long gets blown up, well, the market's probably going to crash. That position's still fucking massive. If recession confirmed equals 4,100, or 4,100 recession confirmed, 4,100's like if unemployment ignites like hard, like hot unemployment reports over the next couple months, or a big surprise in unemployment. Like if this next print pushes up on Friday, like 4.5, 4.6, that would be very, very bad. That would indicate. I mean, some of the non-farm, like the non-farm data tomorrow, will be indicative of that a little bit. But if employment pushes up that high, it's indicative that even if the Fed starts cutting now, they're not going to stop the surge in unemployment. And you couple that with the fact that if they start cutting now, the already slightly inflating inflation is going to inflate more. Some rule implies it will. Yeah, it does. A little, but not necessarily just yet. I think the Fed is hoping that they can get rate cuts in before unemployment really starts to heat up. But if you talk to people, like, I mean, I would say it's a little biased, but I mean, just look around like the Discord, right? Like everybody who's looking for jobs is having a hard time finding them, right? And we're seeing that in jolts now. And more people are losing their jobs and getting laid off, right? And it's a small sample, but I mean, it's not that small of a sample. Sombral's 12 months late. Yeah, it really is. It should have triggered last year. We came close. We came within like, I think, a point. So BLS probably just fudged it. More people are getting filtered out due to AI resume reviewing. Probably. All right. I will see you guys bright and early tomorrow. Have a good night, everyone. Later.